much too complex, too complex, much too complex, too complex, too complex, too complex.
Good afternoon. My name is James K. Holder II. Some of you may know me as Sir James II, and I'd like to welcome you back to Not on My Watch. As always, I'd like to ask you to subscribe to my YouTube page. So go ahead and just click that button right now. I'll wait. Okay, and also I want you to like, comment, share. I want you to retweet this and repeat this. I'm trying to get this message out. This is episode 8, so it's a pretty new thing, but I definitely could use as much support as possible in sharing the message of this cast. What I'm aiming to do here is offer just a progressive platform where everyone has a seat at this table to discuss the goings-on in our world, in our country, in our local economics, in our family economics, in our family politics. So I definitely want your support in getting this out, and this is the place to be. It is Wednesday, March 15th, 2017, and that is significant for a number of reasons. A lot has gone on in the last 24 hours, so I'm going to try to unpack this, but we're just going to jump right into it. So I had an idea of what we're going to be talking about today, and then about 30 minutes ago I had an idea of what we're going to be talking about today, and then some things changed. So just a little note here. This cast aims to air at noon every Wednesday, but in order to do that, I don't tape this live. I kind of tape it and edit it. So I try to tape it as late as possible so I can cover as much stuff as possible. Right now it's about 7 a.m. So if this is a little late getting to the webs, forgive me, because there's breaking news happening as we speak. Last night, Rachel Maddow had the bombshell of reporting that she had Donald Trump's tax returns. And of course, you know, I'm always, generally before this, I'm always kind of, okay, I'm gonna go to bed early, I'm gonna get up, and then I'm gonna, figure out what I'm gonna talk about. And so, right before I was about to eat a heavy pasta dinner and go to bed and wake up to do this, I get a tweet from one of my friends on Twitter, and she's just like, oh, Rachel got them tax returns. And I'm just like, really? And so then, sure enough, I go to Rachel's page and check it out, and she's talking about, yep, we got them. She's got the 2005 tax returns. So there's a lot to unpack with this. I'll just go over the basics. Of course, I watched the entire cast. I generally do not watch any news at all. I love Rachel Maddow. I think she's brilliant. She's the most brilliant person in cable news. And up until the point of the election, her show was my favorite television show on. Not favorite news show, it was my favorite show. A lot has happened since then, and so I just kind of am very weary of really subjecting myself to mainstream media. And Rachel, while she does great reporting, she's still a part of the overall sort of umbrella, right? I love Joy Reid. Shout out to Joy Reid. I think she's brilliant and does a fantastic job within her weekend segment. So I tend to follow Joy Reid's show a little bit more closely than anybody else at this point. I watched all of the show that Rachel did up until the point that Chris Hayes showed up. And then I was like, okay, I'm just going to walk away from the screen and I'm going to come back. And I'll talk about Chris Hayes a little bit later. I want to like Chris Hayes. I have nothing against him personally, but I just feel like he is a part of the white male dominance establishment of mainstream media. That the objective is to project one idea and this one sort of monotone expression of what is important to viewers, and that is this cisgendered, straight, white male of wealth perspective that, of what an American is. And I think that's incredibly problematic. So I kind of dodged that whole bullet. But moving along, shout out to Chris Hayes. I appreciate you from a distance. Couple of details on the tax returns. We have the 2005 taxes from Donald Trump. It was a joint filing. It was actually his first joint filing with Melania Trump, who we'll get to in a minute. In this return, he discloses that he earned $150 million approximately he wrote off $103 million for exemptions and sort of tax deductions and stuff like that. And then he ultimately paid $38 million in taxes on an income of $150 million. So where that puts him is at a effective tax rate of 24%. Now, a lot of people are saying on the internet that basically 24, at the point where you're earning what Donald Trump earns and that type of wealth, you should be paying much higher than a 24% tax rate. People who make, and don't get me lying to you, but I'd imagine people who make over $100,000 are paying more than 24% in taxes. And so that's a significant number. But I don't think it's the most significant number. What most people discussed, especially David K. Johnston, and that's David C-A-Y Johnston of DCReport.org, shout out to David, and his wife, who apparently last year filed a joint tax return for $400,000 a year. In a moment, I'll get to why I think that was significant. Should have paid about $53 million. That's what the idea, the general discussion is that Trump should have paid about $53 million a year from that 2005 tax year, as opposed to the $38 million that he paid. At that point, I think we're splitting hairs, right? We're talking about a $15 million gap on taxes, tax culpability that he either paid or didn't pay. And frankly, I'm not very concerned with that. And the reason why is because the 2005 tax return comes after a 20-year span where Trump had written off $1 billion in taxes. We know that in 1995, Trump filed a tax return claiming close to $1 billion in losses for a year. And this singular tax return from 1995 allowed him to retroactively claim, to retroactively reduce his tax culpability from, I think, at least 8 years, and then for the next 10 years to basically write off $50 million a year. 50 times, it's early, and I will get to my coffee momentarily. But basically, Trump wrote off, I want to say it's about $50 million a year. Do the math, $1 billion, that's 1,000 million, and times 20, so 20 times 50 is 1,000. So yes, he wrote off $50 million a year for 20 years, effectively. And the next time that he would be required to pay taxes would have been 2005. It just so happened to be the same year that he filed his first joint tax return with Melania Trump, or as I like to affectionately refer to her as America's welfare queen, and I'll explain that why momentarily. Trump Let's talk about this, because a lot of people are now saying, many people are saying that Donald Trump leaked the returns himself. And my opinion of that changed literally 2 minutes ago, because, like I said, it's about 7 o'clock a.m. Eastern time right now. And up until 10 minutes ago, Donald Trump had been fairly quiet on Twitter. So I really wasn't sure. And the thing about Trump is, if he hadn't released the taxes, and it was just like shock to him, he would be pissed. He would be irate. He would be inconsolable. And he would be on Twitter tweeting about how this invasion of privacy and how wrong it was that somebody had released his taxes. Now, we did hear from the White House. They released a statement before Rachel went on the air at 9 p.m. Eastern time to discuss the taxes, saying basically that, yes, the documents are accurate, but that it was illegal for her to discuss the documents, and that it showed that he actually paid a lot in taxes. But again, you're paying $38 million in taxes for the first time that you've paid any taxes in 20 years. You've avoided paying $50 million in taxes a year for the last 20 years, and now you're paying 38. So you really you're still 12 short on 2005, because you should have been paying 50 anyway. And we said here, he should have been paying effectively about $53 million. if he was paying the same taxes everybody else would have been paying. So again, it's not about that little $13 million, that $15 million discrepancy. It's about the pattern, right? So let's look at this. We get the White House saying, oh, it's illegal to post this. It's not. David K. Johnston received the documents. David K. Johnston received the documents in his mailbox. It actually was the same way that the taxes from 1995, that one tax document from 1995 was disclosed. So, we know that it's probably accurate. Trump tends to not deny when this stuff comes out. And it's interesting because he doesn't tend to deny these. And I don't know why he doesn't deny them, but hey, we'll just take it for what it is. Shortly after the episode aired, we hear from Don Jr. or Eric, one of them. Humpty Dumpty, one of the two. We hear that, this is an invasion, and what the taxes really showed was that my father paid millions of dollars into the system, and okay, nonsense. Now, mind you, Don Jr. was a part of the whole lies and smoke mirrors and fine Russian print that discussed why Trump wouldn't release his taxes in the first place. Trump always had claimed that he wouldn't release his taxes because he was under audit. Okay, we know that's not really accurate, or that's a thinning argument rather. We get from Kellyanne Con Artist that he's not going to release his taxes because no one's really interested in his taxes anymore. Although this report broke the internet. I may be able to pull up the taxes on the screen if David K. Johnston's website at dcreport.org, make sure you check them out, or Maddow blog is even back online, because when I went to go download it to put here, it was gone. Both those websites had crashed. So I think people are definitely interested. And then you had Don Jr., who was the one who said he's not going to release his taxes because he has a big tax return, and people are going to sift through the tax return to find something. Yeah, that's kind of the point. I want to say a lot of people are kind of taking this different ways. Some people were taking jabs at Rachel. I don't think that's a smart way to go about this, because Rachel Maddow is just doing her job. Now, she egged it up, and she said, oh, I got Trump's taxes. And I was just kind of like, oh, shoot, she got all of them? And I was thinking she maybe had from 2005 on, and she didn't. She just had the 2 pages from 2005, which is better than nothing. It's better than what everybody else had. So great. Kudos, Rachel. Love you to bits. But I think some people were expecting a bit more, and because she didn't have all of it, then it became let's attack Rachel Day. And I think that's stupid. You had people, shout out to the Breakfast Club and Charlemagne the God. Love Charlemagne. Loved your coverage of the election. I thought you actually were one of the urban sources that did a good job of showing a balanced intersection of information. You interviewed Hillary Clinton, one of my favorite interviews to date. When all the hot sauce controversy came out, y'all came back and actually verified that the hot sauce thing wasn't really a thing. And they also had like different voices. They had Nina Turner on to give the opposing side and they might have had Bernie on, but I didn't watch the Bernie interview if he had him on. Neither here nor there. I thought that was very good on their part. But, Charlemagne kind of took a jab at Rachel, and he was saying like, well, I don't get, and don't let me misquote you, but you basically were saying, well, he paid taxes, so whatever. And then you have people on that comment, this was on Instagram, and people were saying like, oh, well, I don't know why y'all tripping on Trump because Trump paid more taxes than Bernie Sanders. Okay, let's just scroll back a little bit and discuss why 1 year of taxes means absolutely nothing. I can cherry pick any year of the last, I'm 32, I filed taxes for the last approximately 14 years. So I could pick any one of those years and hand it to you and show that my worth would be this times 14. I could make that presentation to you, and you could assume, oh, you take this 1 year and you multiply it by 15 years. But taxes are an up and down thing. They change. They're dynamic. They change every single year. Every year, the set of documents, your earnings, your write-offs, all those things are going to be different from year to year. And so, I don't want to talk about me because that's not what the show is about. But let's talk about Bernie Sanders' taxes. All throughout the primary last year, we heard, oh, well, I'll release my taxes when she released her Wall Street speeches. Now, Hillary Clinton had released her taxes, joint taxes with Bill Clinton, President Bill Clinton, from the 70s. So you had decades of taxes on her. You knew everything about her finances. You knew if she had owed money to somebody, you knew who it was. I don't think she really owed money out like that. You knew what her net worth was, that she wasn't really trying to hide anything. And yet it became this duplicitous thing because as you unwound, oh, well, she gave a speech here and they paid her this and they paid. So there was this presentation that the money that she got from the Wall Street speeches was actually like this bribe to then perform favors once she became president. And I thought that was odd because you only knew about the Wall Street speeches because they were revealed in her taxes, which she willingly released. Bernie Sanders, on the other hand, took a very long time to release his taxes. He threw Jane under the bus, said, oh, well, Jane does the taxes. I don't know where they are, blah, 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 blah. Jane couldn't remember the TurboTax password. She couldn't find it. And then when she finally copped to it, she was just, now this is 2016, right? She's talking about, I'll release last year's taxes are 2014 because Jane apparently takes advantage of a rule where you can basically, you can delay your tax when your taxes are due by 6 months. You can, file for an extension and then file your taxes on October 15th as opposed to April 15th when they're due for everybody else. So she does that routinely. That's what she copped to. So last year we got the one little summary similar to what we got from Trump saying that Bernie Sanders had earned about $200 something thousand. He paid about, I don't remember how much he paid in taxes, but it was a pretty low tax rate. People kind of shaded him on the tax rate, but it came out to be pretty boring. But my thing is, previous to this, Jane had earned as, the president of Burlington College, which went bankrupt as a result of her ineptitude, she was making about $250,000 a year. So my thing is, if you had showed them filing jointly, they would have been making about $500,000 a year, $450,000 to $500,000 a year. You also knew that in 2015 and in many years where Bernie Sanders ran for office, he was paying his wife from campaign funds as a consultant to be a consultant on his campaign, even though she's his wife. Now, if they're filing jointly, that's one thing. If they're not filing jointly, that's another thing. So that became sort of a point of contention for me. It's kind of like you're showing us your 2014s, which if you were showing us your 2010s, we would see a much higher income rate. We would see what your tax rate was from that year. That would be very different from what it was in 2014. We would also see that how much money you were paid because there were reports that Jane Sanders took at least $80,000 from Bernie Sanders' campaign for president. Now, this is through an FEC filing. We don't know whether that was for that month. We don't know if that was every month. We don't know if that was for the year. We really don't know because we haven't seen Jane's taxes. We haven't seen Bernie's taxes. So these are all important details to keep in mind when someone releases their taxes. It is not very informative. It doesn't really tell a whole story. It just gives you a little snippet. So that's one thing to keep in mind. Let us move right along. I think it's more significant to look at Trump's dealings. It's not really so much about the taxes and how much he paid in taxes. I don't think that's where the ball is going to bounce to really show the fraudulence of this man. We talked about welfare queen Melania and the fact that it actually cost the American people 430,000 iPhones a year to house Melania Trump and Barron in Trump Tower, as opposed to the White House. We know this. Some estimates are as high as $300 million a year. And this is because Melania Trump has chosen to keep Barron enrolled in his special school in New York, because apparently there aren't good enough schools in Washington, D.C., or they couldn't pay Barron's teachers or every teacher at Barron's school and the families of their classmates to move down to D.C. to keep his environment the same for less than $300 million. I just feel like teachers don't make $300 million a year. Teachers make about well, if you're in New York, you might make about $65,000 to $85,000 a year, depending. If you're teaching at a school like Barron's School, you probably got a PhD, you might make about $120,000 a year. Irregardless, I just feel like any teacher, whether you agree with Trump politics or not, would be happy to teach the first child reading, writing, and arithmetic. I just feel like you would be happy to do that, and you would, most would revel in the opportunity to move to DC to have that privilege if you couldn't find a competent teacher in Washington, D.C. Neither here nor there. So we talk about deals, right? Some people are complaining about this $15 million discrepancy in Trump's taxes from what he should have paid, we think, to what he actually paid in the $38 million from 2005. Some people complain about the $50 million per year over those 20 years that he was able to avoid paying with that $1 billion write-off from 1995. Now, close to $1 billion. It wasn't $1 billion. It was like $965 million, round up. But it's important to look at the trends here, right? Because we're talking billions of dollars. When Trump was campaigning, he claimed he was worth about $12 billion. Estimates of his worth, at best, this is liquid and assets, were about $4 billion. Now, we're talking about personal enrichment. We're talking about all kinds of stuff involved with policy. And these types of deals are a complete windfall for Donald Trump. The $300 million a year it costs to house Melania Trump and Trump Tower actually translates to money directly to Trump Tower, because a lot of the space that's in that building has to be now occupied by the federal government. The Secret Service has to occupy certain units within that space, which means Donald Trump is getting a kickback from the protection of his wife because she's choosing to stay there as opposed to in the White House that's designated for her. When they travel to Mar-a-Lago, fuck yourself, the Winter White House, the Southern White House, whatever you want to call it, there are expenses associated with that time at Mar-a-Lago, despite the fact that Trump raised membership at Mar-a-Lago from $100,000 a year for members to $200,000 a year for members, and he's been down there about every other week since he's been president. That's neither here nor there. Actually, it's here and there, as in D.C. and New York and in Florida. There's tons of other real estate deals associated with this tax return. There's this property that, you can go look on I encourage you to look at Maddow blog for the detailing on her assessment of Trump's taxes. I don't want to go into all that. But you have also recently this Kushner deal with an insurance company, an insurance firm from China that is going to land his family about $400 million this year of all properties, 666 Fifth Avenue in New York. There's some land deal they got going on. And what happens is, as we've seen with this Palm Beach property that Trump had, he purchased it for one price and then sold it to somebody in Russia, one of the Russian oligarchs, for twice as much 2 years later, despite the fact that property values in that area were declining pretty sharply in around 2005. So it's kind of, it's one of those things. You got to look for it. The enrichment isn't necessarily not paying taxes. It is more about looking into the arrangements. And it's almost exactly what they accused Hillary Clinton of doing with, the money she earned from this speech really wasn't a speaker fee. It was this bribe. I would say the speaker fees Hillary Clinton earned were much lower than speaker fees that her peers, were earning. If you look at what Colin Powell was making for a speech, he was making more than Hillary Clinton. If you look at what Bill Clinton was making for a speech, it was much more than what Hillary Clinton was making for a speech. if you look at what Donald Trump was making for his public speeches, it was much, much, much more than what Hillary Clinton was making per speech. So, you know, we can get into all that. I'd rather not, because it's a whole moot point at this point. But I do want to venture into Trump's Twitter, which I hate, because like I said, for a moment, I thought that maybe Donald Trump hadn't leaked the taxes because, some were saying he had leaked them, some were saying he didn't leak them. And I was thinking, okay, well, maybe he did leak them because he hasn't been tweeting about it. You know, if he felt invaded, if he felt like when he thought Barack Obama was hiding in his microwave and recording his conversations in Trump Tower, and wiretapping him, he tweeted out very furiously, and he was allegedly pretty mad, despite the fact that he wasn't able to provide any evidence by the deadline yesterday to prove otherwise. So we know that Barack Obama did not wiretap Donald Trump, but that's neither here nor there. 36 minutes ago to now, we get a tweet from Donald Trump. This is the first one in all day. Does anyone really believe that reporter who nobody ever heard of, hey, David K. Johnston, went to his mailbox and found my tax returns? NBC News, fake news. Okay, next tweet, 29 minutes ago. Can you imagine what the outcry would be if Snoop Dogg, failing career and all, had aimed and fired a gun at President Obama? Jail time. I don't know what this has to do with Snoop Dogg, and maybe the next two tweets will reveal something. But first of all, Donald Trump is the one who said he can go into the middle of Fifth Avenue and shoot somebody dead and he'd still be elected president. Maybe because he knew he had a little secret weapon, Vladimir Putin power, in his pocket. Who knows? But leave Snoop Dogg's name out of your mouth. What's up, Snoop? Snoop Lion, Snoop Dogg. I checked out your show with Martha Stewart. It's wild. I like the sushi episode. Y'all have a lot of fun there. It was fun. Next tweet, 18 minutes ago. And now mind you, again, it's 7:33 now. 18 minutes ago. We'll be going to Detroit, Michigan, Love, today for a big meeting on bringing back car production to state and US already happening. Okay. 3 minutes ago, looking forward to big rally in Nashville, Tennessee tonight. Big crowd of great people expected. Will be fun. Why are you still doing rallies, dude? You are the president. Ugh. You are the president. Ugh. And why are you still campaigning? I don't understand. So, woosah, there's a lot going on. And the important thing to know is that there's a lot that Donald Trump might want you to be distracted from right now. Whether he leaked the taxes or not, today around 2:30, Comey will be making private statements with the Russia probe into the Trump campaign. There were 3 alleged investigations going on, and we will know from James Comey around 2:30 p.m. today what those have to do with and whether Trump is implicated in any of those. We know that Attorney General Jefferson Beauregard Sessions, until such time that he is fired or resigns, has recused himself from anything having to do with the campaign. And in addition to that, in 5 days, the House Intelligence Committee will have its first public hearings on Russia as well. So all of these documents, all of this stuff with the Palm Beach properties and the China Bank of China, them having property in Trump Tower, all of that stuff's coming to a head. So try not to hold Rachel to too high of a standard because I think it's significant. And in 30 days, we will all have taxes due on April 15th, tax day. So with that, I'd like to take a shameless plug to one of my neighbors and close friends, Esohé Galbraith. She is the owner of Esohé Solutions, a name I helped her coin at a pizza shop just around the corner. What's up, Spinning Pie Pizza in Atlanta, some of the best pizza in the world. And she actually, I work with her to produce a 1-minute segment every week preparing people for their taxes. So I'd like you to take a minute to look at that. And I will be back on the other hand to discuss the rest. Watch this space.
Hi, this is Esohé with Esohé Solutions in your Tax Tip Tuesday. This week we'll talk about the difference between standard and itemized deductions. Deductions are what the IRS allows to reduce your overall income tax liability. This year, the standard deduction for a single filer is $6,300. There are also standard deductions for married filing separately, married filing jointly, and head of household filers. You always want to take whichever deduction is greater, itemized or standard. Itemized deductions include medical expenses greater than 10% of your adjusted gross income, mortgage interest paid, real estate taxes paid, sales tax, or income tax paid to your state. You can also deduct employee-related expenses that are unreimbursed. Charitable contributions that you make to your church or United Way or other nonprofit organizations is also itemized deduction. And you can include items that you may donate to the Salvation Army or Goodwill. Thanks so much, and I look forward to next week's Tax Tip Tuesday.
So, again, make sure you check out Esohé Solutions at esohésolutions.com, but also specifically if you're interested in more information on tax preparation, as Esohé's grandmother taught all of us, it's not about what you make, it's about what you keep. And we can also learn that from Donald Trump, even though I don't know that we want to learn much from him specifically. You can earn so much money in a year, but if you aren't taking proper diligence to make sure that your tax culpability is accurate, you're going to be sort of squandering. And so what her service allows you to do is really kind of just look into your own personal finances. She gives really, really specific advice about certain write-offs that teachers get, or dependents as students, or students, or as like a child, not a child, but somebody who's like 16 to 18 who still is claimed by their parents, how they can basically file taxes and still get be able to get the money back that they paid in taxes if they earned under a certain amount. And she's really good about those numbers. So check her out, and I recommend you go to her Facebook page at facebook.com/Esohé Solutions, and that's S-O-H-E, and then you can spell solutions, and it's probably on the screen right now. That being said, that was not a plug because I don't do advertising here. But this show is completely self-funded, and I buy all of my own coffee myself. If you'd like to buy me a cup of coffee, you can donate to the show at paypal.me/JKH2. And anything, if you donate $1, it will help me buy coffee for the show, or as one of our generous supporters gave last year, it'll help me buy, last week, it'll help me buy a solid state hard drive. So hopefully it will streamline this process. So I appreciate support from anyone and everyone who chooses to watch this show and continue to support. Special friends to the show, shout out to two people, Diane N of Brooklyn, New York. Shout out Diane. Big up to Brooklyn. Rest in peace, Biggie. We all know that was last week, celebration of the life of Biggie Smalls, and I can't believe I missed that because it was the day after the last taping. But big up to Brooklyn. I hope you all are staying warm and safe under blizzard, Stella the blizzard, the nor'easter. Be careful. And I also want to give a special thank you to Mary Rose D from Twitter. She doesn't actually live at Twitter, but when it came, when her donation for my breakfast sandwich, which I will enjoy later, came over the wire, it did not include her city. So I can shout out your Twitter profile on my Twitter, because I also shout you out on Twitter when you donate, if you include that in your notes to the donation, but otherwise I wouldn't know what your Twitter handle was. Thank you for joining me here at Not On My Watch. There's a lot of news unfolding today. I'm sure there will be plenty to digest and talk about. So please continue to like, comment, and share as always. Retweet and repeat. And join us back here every Wednesday at noon at holderstudio.com or on the YouTube page as well. So if you subscribe, you'll get the latest updates on this show. I appreciate you joining me, and as always, I want you to relax, relate, and resist. Thank you.
Too complex.